Hey guys, have you ever come across a trading strategy or concept used by multiple trader communities? Welcome back to the channel. I'm Dilip. In this video, we are going to discuss a powerful concept called fair value gaps, also known as imbalances by the price action traders and single prints by market profile traders. In this in-depth video, we are going to unlock the secrets of this game-changing concept to potentially profit you from the price moves. So what are fair value gaps or FVG? These fair value gaps are price jumps in stocks or any trading instruments caused by buying or selling side imbalances. On a normal day, if you look at the prices always tries to cover the previous candles, creating a balance. So look at this, guys. So there was a previous double top here. So when the price is breaking this previous double top, what happened? The prices moved so quickly 2 times. So in 5 minutes, in 5 minutes candle, it created some kind of gap. There is no overlap around this area. So this we call it as fair value gaps. So what is the significance of this fair value gaps? So this fair value gaps can provide you swing opportunities as well as intraday opportunities. Now, how do we identify these fair value gaps is? You need at least 3 candles around this area. There was a high. So this we can call it as one candle. And the candle which has run away from the previous high, we can call it as the second candle and third candle. There is no overlap here. The low which has been made here, it is up to this level, creating some kind of gap here, the blue area which you are looking at. So all these 3 candles are needed. There are 2 kinds of fair value gaps. So one is bullish fair value gap and we do have bearish fair value gaps. So how do you trade these fair value gaps? Now there are 2 ways you can trade this. Either you can fade towards this fair value gaps or you can trade against them. First, let's understand how do you trade a contrarian against this. So this is a Wednesday 19th Nifty. So what happened? There was a low here and at some point of time it has broken the previous low, creating a fair value gap. So if you look at, there is no candle overlap in this area. We discussed that the markets always tries to come back towards these fair value gaps to balance the market. So if you look at here, the prices made a sideways market, a consolidation is there and the previous high has been broken towards the fair value gap. So once the previous high is broken, you can be sure that the prices is going for these fair value gaps and most likely it will cover the whole gap area. So previous low is holding and now what happened here, there was some kind of consolidation and it started going up, covering the whatever the morning fair value gap is there. So this is how you fade the fair value gaps. So this is one way. Now the second way to trade these fair value gaps is you go along with the FVGs. This is the previous high. There is a good amount of fair value gap here. There is a good amount of fair value gap here. So next candle, the prices came down and it acted as a very good support. Now what you do, once the previous high is broken, you try to take the trade. So this is where the previous high has been broken. Now this high has to be broken. So this is the previous high and once the high has been broken somewhere here and you can take a trade here, keeping a stop loss just below this and look at how nowhere the prices came below this area. So you got almost how many points? If you have entered somewhere around 23,680, you would have got more than 50 points here. The good thing about these fair value gaps is it's very easy to identify. If you can find these kind of scenarios, it will give you an excellent good to risk to reward ratio. These FVGs can be used in any kind of liquid instrument. It could be commodities, it could be bond market, it could be gold, or it could be used in indexes, anything. It works on 15 minutes, 30 minutes, 1 hour. You can even trade for swing opportunities also. You need to be aware of 2 things while trading these fair value gaps. Sometimes fair value gaps never gets balanced out. So this is the single point of failure and identifying them. So you need to identify where there is a change in trend. So let's say here the prices came down. So you need to understand where there is a high is going to be made and you need to have an excellent entry point. Once the previous low is breaking, you can take a trade towards this. I hope I have added some value to your trading. Don't forget to hit that subscribe button and smash that like button. Thank you. Have a nice day, guys.